Good morning, good evening, good afternoon, whatever time you're watching this. And in this video, I'm going to be going over USDT and how I use it when I trade crypto. Okay. I don't make a decision without looking at this first. So, this is a very important thing that I look at when I'm doing my analysis for the crypto markets, at least. So, the reason why that is mainly because in cryptocurrency, when people take profit, it's in USDT for the most part. Until people start taking profit in other stable coins, this confluence or edge, I'm not sure how to categorize this, is not going to work anymore. Okay. So, for this video, I'm going to be going over a day trading strategy. And the reason why is because this legend from the Crypto Legends group, Cypher, he messaged me and wanted me to. He was interested in the video, and I asked him, "What's a good example?" And he wanted day trading. So that's why on this example, I'm gonna do like a day trading strategy while using USDT with the examples. Okay, and the Crypto Legends group chat is here. This is the guy, Josh the Trader, and here's the Legends group chat. I gotta show my credit. I'm not just gonna take this for myself, you know what I'm saying? First things first, we need to zoom out and structure out, find our swing and local levels, find our ranges and the point of interest inside those ranges. Do this also for the cryptocurrency that you're going to trade. In this example, I'll do Bitcoin. And to make it simple, you wait until USDT hits a point of interest and Bitcoin. If both Bitcoin and USDT are in a point of interest, strong zone of reaction. And then zoom in to the 15 to 5 minute, wait for the first break of structure, and then you can start entering to Bitcoin. Zoom out to the weekly time frame to find our swing structure and our levels. We don't really need to worry about our macro structure because we are day trading in this video. And if you want more in depth on how I mark my structure and what I consider a high and a low, please go to my YouTube channel, go to my trading course right here, and I go over it more in depth right here in market structure, high and lows. This is my first video ever, so bear with me. Eventually in the future, I'm gonna redo all these and make a much cleaner course. That's my first time ever recording, so there's a lot of mistakes, a lot of a lot of all that, right? Okay, this is gonna be our swing structure. We had down, break, retrace, continuation. Break goes right here. This is gonna be our structure low and our structure high. Sorry, it's very ugly. So then that means our swing range will be this right here, this swing low to this swing high. And I like to do this little box thing right here to give me the zone. Like if I'm above here, then I should be looking for longs. Down here, I should be looking for shorts. All right, so now let's zoom into the daily time frame to get our local structure and our local levels slash range. So we had a up, down, up, down. We couldn't close any of these lows, so now our low that we need to get under to confirm a flip to start attacking these lower levels is this right here. This is going to be our local, this is going to be my local low, and this will be my local high. And make that to skinnier. And since this levels are flip level, it's very important. You will make this red just so you can know that's a very important red. Very important level. Damn, sorry guys. Before we zoom any further to find our scalp levels, let's zoom out to the weekly and our daily to find our swing and local points of interest. Okay, so let's zoom out to the weekly. And if you're wondering what my volume profile settings is, the only indicators that you will need for this strategy is the vector candles, the volume profile, and the anchored VWAP. Okay, so how I look for points of interest, it's fairly simple. Vector recovery, you see we have one here, so I can anticipate a sweep down and then one more bounce up and then go lower. But how I like to do my volume profile pulls is like this. So I usually do from the swing low to the swing high for our first point of interest. So swing low, swing high. And since the POCs vary down here in the value area low and the value area high is right here, I wouldn't keep this on the chart because they're just telling you that the area of interest is here. So since it's the weekly time frame, this would be our order block. Let me change the color on that. Okay. And now we'll zoom into the daily time frame and do the same thing. Where is our point of interest? Okay. So then I'll go from the swing high to now the local low to its current price. Now we get more in depth whenever we zoom into the scalp time frame. Now we have local points of interest. Okay, and same thing Right here, we have a little down candle from this up move. This would be a local point of interest also, like that. And then for our VWAP, I usually do it at the very high, usually on the swing structure, not too much on the daily. But since this swing high is pretty much close to this POC, I don't use it because I'll just use the POC, okay? And I don't want to crowd my chart with a bunch of indicators. So this is how I kind of keep it clean. If there's too much in there, then I keep a mental note, hey, there's a lot of here, just pick one. Either I keep the volume profile or I keep the POC or the VWAP. Dang, guys. All right. So now we have the VWAP from the low. So now this zone becomes a very huge zone of interest, okay? Because we have two things aligning together. And now, so there's a big order block. You could technically say if we start getting underneath here, this is a zone of interest down here also. Let me extend this to the right so I don't have to drag it out. That would be a zone of interest, and that's about it. I feel like this would be our bounce zone right here if we start breaking lower. But anyways, that's how you will mark your points of interest, in my opinion. So now let's zoom into the scalp time frame, which is like the 4 hour to the 1 hour. Find our scalp structure, and then in our scalp range, which is this local high and low. Inside that range, we will find points of interest. So we would do the same thing we just did now, but now into this range, because we are day trading in this video, and this is going to be your day trading range pretty much. But we have these higher time frames points of interest. So if we do break out of this range, because remember, if we break out, that means we're going lower, higher, or lower. We have zones to target. Okay. So now let's zoom into the 4 hour to the 1 hour to get our scalp levels and to get our internal structure and what is price doing. So let's zoom in. See, our internal structure is boom, 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 boom. Broke right here. So we are now bearish internally. Since we are bearish internally, that means crypto is bullish. So we are now anticipating to recover this vector to make that lower high to go lower, or to maybe sweep this liquidity one more time to go lower. So that's what we are anticipating for the short term. And let's zoom into the 1 hour now to find our points of interest inside this zone. So this is a value area high. I would make this zone, this order block, area of interest. We tapped into an order block now. So there's a possibility that we could start bouncing, recovering some of these vectors because we tapped into this order block down here. Let's zoom to the side, see if there's anything under this low, because this is our local low. And USDT, when you do the levels, they are going to be not accurate. For some reason, when you zoom in, it's not like, sometimes when you zoom out to the daily, the wick is much longer than when you zoom in into the local time frame. It's a different price, so keep that in mind. We have one more vector recovery down here. So I'm not going to drag that over. So now this will be our point of interest. Let's see if this is range high. Let's see what's going on up here. We had this order block. We tapped it here. The last thing we did not tap was right here. So this will also be our zone of interest. And pretty much all you would do now is to build trade ideas now. So now if our local range is telling us that it's bearish, we're more likely to either bounce up. And if we're going to bounce up, where is areas that will more likely to reverse? Either the recovery of this vector candle, which is this is the New York high, or this order block, which is this is the Asian and the UK green spots, or the New York green spots actually. So we could have something like this, and how you will see this is like, since you can't trade USDT, this is me just like thinking like, okay, if this is an area where I need a short for USDT, then that means on crypto I need to look for longs. And that's pretty much it. Same thing down here. If we could start looking for longs, aka scalps on USDT down here. We could have like a long trade here once we recover this. This could be the invalidation if it's like a quick sweep. If you see the break of structure, if you see something like we get down here, we get a sweep, and then we get that break, then you could go short target this order block or the value area high, value area low, just depending when price is there. But I hope you start to see kind of how it's all going. And then once we break these levels, then you have those higher time frames, points of interest to aim at. Okay, but that's pretty much the gist of it. Let me get this all out my screen. And then when you zoom into the 15-minute, of course, this is hindsight. This is today. USDT doesn't have a replay tool, so whenever I show different examples, it would be kind of difficult. But if you had this point of interest already filled out, obviously this is New York Asian session. This would be a huge. Once we tapped it, the entry is pretty much the first break of structure on the 15 minutes. So we have low, high, low, high. This is our high right here. Broke structure. Now we are creating higher lows, higher highs. So now currently right now at this very moment, then this will be your flip. And always look for the range. Always trade the ranges. Okay, this is what I always do. So let's say now internally, now in this New York session, our current range is this right here. This is going to be our current range. And you know, if you get underneath this low and the value area low, we're gonna go back to the range low. That's traded range to range, and that's how you build trades. If you get that confirmation, let's say we start breaking down here and we're gonna start targeting that range low. I wouldn't target the range low because we are down to the downside. But if you were up here, of course, hindsight, when this opened, you would have saw this was the flip low. Then for New York, it just completely broke through. You could with this entry model. There's an entry model that I always. The best one is an SFP break of structure. Right here, we had an SFP swing failure. We swept the liquidity, and then we had a break of structure. Then if you got this is the only time where I might put my full position on the break. Usually, I like to build my trades, but this is a strong entry. If you get a sweep break of structure to the downside, especially strong with red vectors, then you could anticipate it's going to continue lower. And then to the side, we had all this liquidity. We had all this ugly lows that we didn't go after. So right now in this current very moment, I am anticipating, since we broke to the upside, it's going to be bullish. So as in currently in the scalp range, it's going to be bearish crypto. So if you were day trading this right now, then obviously, since we are anticipating to go higher, recover this vector, you could start looking for shorts on Bitcoin or whatever, and you could start entering here. Once we get that break, enter the rest of your position. Once we get this recovery, and that's where I would take profit, my first take profit. And then once you see the same thing, let's say we get up here to this recovery. Let's say we get up to this recovery and we start breaking down again, then that's when I would get out of my short and then wait for the other break of structure for that higher low to continue to recover this vector or to reach this order block. Okay, I know it sounds easier said than done, but that's pretty much the gist of it. So find our point of interest, wait till price hits our point of interest, and then our first break of structure, depending if it's New York, Asia. But also keep in mind on the sessions, okay? A lot of the times, when you see points of interest inside the Asian or New York session, those points of interest are important, mainly because that means if the order block was created, like this order block might not be as strong because this was over the weekend, low liquidity, but this order block is going to be very strong. I believe we're probably going to reject here. If we come back up here again, we are going to reject down. If we don't, then that's going to be a really bad sign, because this is the order block that was created during the Asian session. So there was a lot more participants there. There's pretty much a lot more activity here than up here. Okay, so we flip this will be my flip zone, and if we come back up here, I'll be getting worried. But some quick little tips is that if you're going to be using this to day trade, always target the range highs and lows and target the vectors for TPs or to manage your trade. Okay, and also the entry model I use for all my trading really is the 20-20-20-40 method. And I'm not gonna do the TA for Bitcoin whenever I start showing examples in real time, but I'll just go over the structure on how I am using the structure on both assets to manage like what direction Bitcoin's going to go. All right, so let's see, move forward. I want to show this example that I was posting this in the Crypto Legends group chat. This was on February 4th. I made this Bitcoin this post, but I was anticipating to go higher. And the reason why I was because at that time, USDT was right here, February 4th, 11. Okay. At the time, what was happening? Let's say none of this is here, right? We have a bunch of liquidity to the downside, vector recovery is below, our structure is down, high, down, high, down, high. We had to break a structure to go higher. And then after we had this break, this high, we made this low, broke structure. So now this is our local high. So meaning if we get above here, then this is going to be a continuation and likely go target here, right? So that's why I was saying either two things was going to happen. Either we were going to recover some of this vector and SFP and go lower, or we were going to make that higher low, which we did, to go lower. And if you look what happened on the next post, that was that move, because we were down here, that was that move. Up here, that moved down. And what happened here? Oh, we recovered a vector, and also down here was a order block. So this is what I mean. Mark out your point of interest, wait till price hits that point of interest, because when USDT hit this point of interest, so was Bitcoin, right? Or well, when it hit down here, it was up here. And this is a huge zone of interest. I didn't mark it out, but we had an order block here, vector recovery, POC of the range. We had a low, break a structure. So now since we broke structure here on Bitcoin, we need a target down below. But our USDT structure is still bearish, because now we are anticipating that higher low, or the SFP. So now since we are anticipating this is still bearish, that means Bitcoin is still bullish. So now this would be my protected low. If USDT goes all the way the fuck back up here and SFPs, but Bitcoin is still above its low, then I will go long. Okay, so I hope you guys start seeing like how I am using the movement. I'm not really paying attention to the price, more of the movement. Okay, so then projected it right now. Currently, if you that projection was down here, it would have been a successful trade. So my recent post on the group is the same thing. Even though we didn't get this exact formation, it was the same thing. If we had this scalp low, which would be our breaker structure internally, then target what was below, a vector recovery, and what ended up happening? Completely recovered all of it. We were right here, we had the breaker structure, we recovered this vector all the way down here. Okay, so always trade vector to the range high, range low, and mark out your structure and see what is happening internally. Okay, so that's pretty much the basics of it. Today I took a Lido trade, taking a day trade, this position right here. So the entry was 3264, which was, we were right here, 3264, right here, 3267, right here was the entry. So the reason why I got into this Lido trade using USDT, if we look over USDT, we were right here. So our current structure was telling us what if we zoom in more into the 15-minute, we saw that this low is our flip low. So then I would have, the reason why I entered was out of this low. Okay, so when we go to the 1 hour, let me turn on my other indicator with the, where is it, with the ranges. Okay, so this was the Asian session, and this is now the order block that is now the point of interest now. So when we were right here, this was the low that was going to confirm that we were going to switch structure with all this liquidity, tag this liquidity, and more likely go recover. We had no vector recoveries down here, but at least tap into this last order block, okay, which we did. But so when we were in Lido, this was the Asian session range, but we were still with the same thesis that this is the local high, meaning that this low is our local low. This is our protected low. So our structure is what bullish is lower high, I mean higher low, high, wow, I can't talk. Lower high, higher low, lower high, higher low, and then we broke structure right here. It was up, down, break right here. Since we broke, now what do we target? Asian session high, the value area high, and possibly to more vector recoveries up here. I'm not gonna zoom back, but that's pretty much the trade, how I took it. Once USDT broke this low, and with the red vector, once we saw that break right here, and it was the Brinks box, which was the beginning of the US session. When we zoom in here, I got in right on that break. And also I saw that there was green vectors forming on that break. And that's pretty much how you would trade USDT as a day trade, okay? Mark out your ranges, mark out your structure, find what structure is currently doing, what is the areas of interest next. If we break structure, what is the next area? Like if we break structure up here, what is our zones of interest above here? Wait till price hits those zones, wait till USDT also hits those zones, wait for a break of structure and enter, okay? So my favorite entry model ever is a SFP break of structure. If you see an SFP break of structure, enter that shit. So let's see if we could find an example. Was this an SFP? No, it wasn't. But like, let me show an example of a good SFP break, especially if it's a trend going downwards and it reverses. So let's see if this was an SFP. I wasn't awake for this right here, or I wasn't looking at the charts. Yeah, look. So if I'm pretty sure we zoom to the 4 hour, this would be a SFP right here. So let's mark this low. A wick SFP. So now this would be our new low, our new protected low. We had SFP, zoom into the 1 hour, down, up, and then we had a break of structure right here. That will be our break of structure. And pretty much you would go long here. Since it's a SFP confirmed, SFP break of structure, this is our protected low, meaning that this should be the low to go higher. If not, if it fails, then okay, it was an SFP. And this is why I like SFP's break of structure, because the invalidation is very clear. If we get underneath here, it's wrong. It's done. It didn't do what it's supposed to do, okay? All right, so in conclusion, I hope all that made sense. I'll do more videos going into depth, but the whole basis is structure out, find your swing local levels, zoom into the 4 hour, 1 hour, since we're day trading, into your local range, zoom into the lower time frames, see what price is currently doing. Is it in a bullish trend, bearish trend? Is it consolidating? Is it going to break? Whatever, okay? So if it breaks to the upside, USDT, if USDT is bullish, crypto is bearish. If USDT is bearish, crypto is bullish, okay? And always target vector to vector, trade the ranges. And if you see points of interest inside like order blocks and stuff like that, inside of the set sessions, the Asian and the New York sessions, that will give you more confluence that those zones are very strong because there's more participants there because the market's open, all right? So again, find your POIs, your structure. Once structure breaks, now wait until the structure hits your POI of the direction that it broke. So if it broke to the upside, wait till price hits the POI or get a breakout trade there. But you could wait till the POI gets hit, see how structure is behaving. You start seeing M formations or distribution model and then a break lower, then you can start adding into your trade. And real quick, how I add into a trade, how I kind of go in. Forgot to show this, but I'll show this quickly. I use, like I said before, the 20-20-20-40 method. So like for some of my Lido trades, like whenever I did this trade, I was actually adding up here, okay? Because since I was still overall long term, I was still anticipating for us to be bullish because USDT was bearish, okay? So since for me, this is why I do this, because I can't help but to have money in. So the first 20% of my position, if I see how USDT is behaving, let's say, let me zoom out. I think we were right here. This was at 21 on 26, and then 21. Okay, yes, we were right here. So we started breaking lower, but look, here's the thing. Just because we technically right here, we broke structure, but we had one more rally up, and this is why I go in with the 20%. So once I saw this break lower, I would have added my 20% here. and Lido would have been in 22. 22. Lido would have been. Did I do this right? Sorry. Oh, 19. Okay, yes. Would have been right here. So I would have done my first entry here. Second entry, and then once I see that break, my third entry. I didn't get my full position in, but this helps me always know that whenever, let's say, because I don't win all my trades, if I lose a trade, it will never be the full amount that I'm risking. And I add the last 60%. Or I'm already out of this trade. I'm gonna build another one, but that's pretty much it. We see that break. Let's say you see this break right here. Add your 20%. Rally, pull back, another 20%. Rally, pull back, add 20%, and bring up your stops. And that's pretty much it. Or you could do it on the way down. I actually did the same method going down here. If you were watching my post on the group, I was actually building longs here, but I going very light. I break up my buys into 5 entries, okay? Because crypto is very volatile, very, very volatile. And it always happens all the time. They always sweep liquidity. They always do a quick rally down and before they move up. So that's why I do that entry method. I hope you enjoyed the video. I hope it was very helpful. Please like, subscribe, follow my socials. And yeah, I'll see you guys on the next one.